Next up, we have a panel about Collateral 2.0, crypto's role in modern financial systems. And for this panel, I'm honored to welcome on stage Skye Saltzman from SDX, Frederic Volpe from Binance, Audris Siow from Bitvavo, and the panel will be moderated by Paolo Guarnerio from Berglinde. Paolo has been actually a constant participant and constant part and constant moderator and speaker of CVA events in the past. So the floor is yours. Collateral 2.0. Please come on stage, put your hands together for our panelists.
Good morning, everyone. Buongiorno. My name is Paolo Guarnerio. I'm a founder and partner of Berglinde. We are an asset management firm based in Switzerland. We are focused on bridging Bitcoin economy with traditional finance, and we are also focused on Bitcoin-backed lending. As you probably know, digital assets, Bitcoin and cryptocurrency are reshaping the collateral framework, especially for institutional players. And it's in this panel, we are trying to understand which are the technology, which are the risk and the regulation that are shaping this industry. Joining me today, we have like three experts on this topic. We have Skye Saltzman from SDX, Audris Siow from Bitvavo, and Frederic Volpe from Binance, VIP, and Institutional. Let's maybe start with a quick introduction about yourself, the organization that you represent, and just like a couple of sentences about how you see digital asset reshaping the collateral framework. Skye, do you want to start?
Yes, happy to. Good morning, everyone. Great to be with you. So, Skye Saltzman, I work for SDX based in the London office, and I head up our crypto business development service and product. My background is banking and financial markets based in London. SDX is part of Six Group. I imagine that most people in the room are familiar with Six Group, but for those that aren't, it's the financial market infrastructure operator for Switzerland and Spain. So Six operates national stock exchanges, derivatives exchanges, CSDs, market data businesses, clearing houses, so on and so forth. SDX is the business within Six that is looking at enabling the digital transformation of the financial system in Switzerland through DLT and blockchain. And we really have two broad verticals or product lines. One is looking at moving traditional assets onto DLT. We have a regulated exchange in CSD in Switzerland to advance this. In presentations today already, they've mentioned kind of the bond platform, and SDX was the first exchange in CSD globally to issue a digital native bond, and today there have been over 1 billion Swiss francs worth of bonds issued on the platform, and it was also the first to settle bond or any type of security transaction against the CBDC. And then separately, we have a Web3 business, which is looking at new digital products that our members and banks might want to support. And in that product line, we've really focused on the custody and collateral management side of things and services around that, like staking and liquidity access. And of course, this is what we're going to focus on more today.
Thanks, Skye. Audrey?
Hi. Buongiorno, everyone. I'm Audris Siow. I represent Bitvavo. So I lead the institutional partnerships business at Bitvavo. We are a top 10 global leading crypto exchange. Our main focus, and we rank at top of the charts in terms of euro-denominated spot trading activity. So that's where our dominance is. Based out of the Netherlands, we are regulated by the Dutch AFM, and we cater for both retail and institutional clients alike. In terms of where we see the position of collateral, I know it's a topic we've joked a little bit about it, that it can be as dull as dishwater, but I think it's a very important part of the equation and the ecosystem. We see collateral as the future around viability, right? Seeing where cryptocurrencies act in terms of a viability as a form of collateral. And viability, I think, comes in, you know, four main strains around liquidity, the transparency of it, the programmability of it, and also, more importantly, the fungibility and movement and the mobility. But where we see Bitvavo's role really center around is the liquidity aspect. Obviously, we want to ensure that we operate a market center, a place where investors alike, both retail and institutional level, can come to a place where they can source liquidity they can rely on. So the liquidity, the transparency element is very huge, and it lends all to the concept of what cryptocurrency can bring in terms of the form of collateral or security in the future.
Frederic.
Hi, everyone. My name is Frederic Volpe. I head the institutional sales team for Binance in Europe. Binance is mainly known as a crypto exchange. It was founded in 2017 and rapidly grow to be the largest exchange in terms of trading volume. As of today, we have over 260 million users. Average trading volume a day is 100 billion. It really grew to become more than an exchange as of today, so it's more of an ecosystem. We have several verticals from Binance Pay to Binance Charity, Binance Academy. We run the BNB chain. We incorporate projects. We have Binance Labs, so it really grow to become much more than just the exchange, which is still our main source of revenue. So it's still the main vertical. In terms of what we do on the VIP side, we mainly work to increase Binance market share. So the main users that we speak to is high-frequency trading firms, prop traders. But obviously that has evolved with time. Now that crypto has become more mainstream, we see more and more traditional players coming into the space. So we've worked on putting out innovative products to cater for new forms of crypto collateral, which we'll be covering today. In terms of how Binance contributes, obviously like Bitvavo, we try to contribute to increase liquidity of this crypto collateral, having innovative products to be more capital efficient when you trade, and now with crypto leveraging blockchain technology, it's much more easy to for cross-border transaction settlements. So yeah, the scope of collateral now has completely changed.
All right. I mean, Frederic, you work mainly with institutional clients. Like, how are your clients seeing, this shift for crypto collateral, and have you seen like a change in the way that they perceive crypto as a new collateral in the past few years and months?
Yeah. So on the exchange side, we mainly speak to traders, and when I say traders is active traders, HFTs. So their main concern is to be capital efficient. So on the Binance side, our main goal is to have innovative products like portfolio margin that allows traders to leverage their collateral across different products, including spot margin, futures, options, other derivatives, and yeah, that's on our side. We try for traders to use old crypto as collateral, but obviously that comes with, it involves many teams in order to define the right, risk metrics, the right haircuts. Crypto is very volatile, so obviously as the leading exchange, you don't want to compromise capital efficiency, but you still want to allow traders to maximize their collateral. So it's hard to find the right balance. And how it evolved over the last 2 years is that with more traditional players coming in, crypto is not necessarily the type of collateral that they want to hold. So we're seeing large global asset manager, not to like traditional asset managers, not to mention any names, that are putting tokenized money market funds that can be used as collateral to trade, and this is definitely a trend that we're seeing coming from the TradFi guys. So I think we're going to see more and more tokenized traditional instruments being used as collateral to trade on exchange, but also on chain.
And Audrey, from your side, I mean, Bitvavo, of course, serve both institutional clients and retail. Do you believe this is like a topic that is affecting only institutional clients, or do you see also demand from retail or maybe like fintech company for like collateral 2.0 solution?
Good question. I think it comes both ways. So we've got top-down and bottom-up. I think top-down, what Frederic's mentioned a lot, is around the capital allocation efficiency. It's capital preservation, risk control. There's immense amount of regulatory pressure or the need for adherence for regulatory pressure. What that translates to from a want or demands point of view from the institutional side is definitely towards multi-asset style of collateral, the ability to work, to allocate in an efficient manner on balance both digital or crypto assets alongside some of the traditional rails. So that's very important for them from a collateralization and the feature enhancing elements. Also, the ability for infrastructure to allow them to easily integrate and sit in the same vertical stack, technical stack as traditional collateral rails today is very key, because that also kind of lends them the approach of being, regulatory compliant or having that regulatory grade style of working. So I think that's from a top down. So it's slightly nuanced because there is still, in the end of the day, the demand, it's going to be met, but it's through all these mechanisms. Whereas for the retailers, that's the old Chinese saying, and I'm going to loosely translate because it might sound a little bit crass or rude, but literally, like any consumer or buyer, what we want is we want it cheap, good, and fresh, right? When we turn up at a marketplace, right? From age to all time, and that hasn't changed. So from a retail perspective, they still want it cheap, good, and fresh. What I mean by that is they want to have the ability to access and work their crypto assets in an efficient way. So the ability for them to be able to use that as collateral and borrow without having to sell away the asset, right? So leverage and the ability for them to work their crypto the same way. So yield is also very important to them. And then in terms of the good element, or the fact that they still want to have this slightly lower barrier to entry. So the entry to market should be kept low. So lower collateral requirements from a participation point of view, but once they pass through that magic door, what they expect is very high security. So it's kind of low very quickly to that high. And we humans are greedy, so we want it all. We also want it to be protected, but also at the same time, we want to have autonomy. Someone in the previous panel said, trust is good, but control is better. So we see a lot of that happening as well. So from a retail user point of view, not do they want that higher level of protection, yet they also want the ability to have that autonomy back. So what that means is a lot of the time, some of the collateralized features that retailers want is simple things like alerts and automation within their own workflow that they can control. So they feel that they have the sense of understanding what's to come in terms of the volatility that comes along with crypto. So yeah.
Thanks a lot, interesting. Skye, SDX is now trying to build a bridge between traditional finance and digital assets. How close do you think we are to a true interoperability between these two worlds?
So to full interoperability, I'd say quite a way away, being totally honest. I think taking a step back, some people may have had the expectation that there was going to be a big bang moment, right, where suddenly everything on the traditional side moves over to digital, but I think realistically, given the complexity of the financial system, it was always going to be a gradual process, and that's what it has been and will, continue to be. It'll be a gradual, steady move. And the reality is that a lot of these infrastructures and ecosystems will coexist for quite some time. You'll have the traditional coexisting with the digital, and even within digital, public chains, private chains, depending on the asset classes. And obviously, SDX and SIX sees itself as a key enabler and facilitator of moving assets across all of these different infrastructures, whether it be collateral or other assets. That said, I think that there's really been significant progress made on the interoperability front, and I'll call upon two examples where kind of SDX has played a role in pioneering some of these solutions, and I think looking at it from two perspectives. So one is maybe moving traditional assets or offering traditional services in the crypto world, and then the other way around, so bringing crypto kind of into a traditional infrastructure and ecosystem. I think on the first side, it wasn't too long ago where I think for a lot of trading on crypto exchanges that had to be fully collateralized upfront, collateral was sent to the crypto venue, which of course on the traditional side is unheard of, right? But I worked for a UK bank during the credit crisis. I can remember when there was a time where even on the traditional side, it wasn't standard to have trading and custody segregated, right? And there was a crisis, an event that led to changes in market structures and new regulation, right? And perhaps on the crypto side, the FTX default was kind of that moment where everyone looked again at the market structure and said, okay, we actually need to split out, have the trading separate from the custody and the post-trade. So now you have a proliferation of offerings in the market where digital custodians offer off-exchange or off-venue segregation and custody. And so SDX has a solution where counterparties that want to trade on a venue can post crypto to SDX's custody, and they can allocate this crypto for collateral for trading on external venues, for instance, on RuleMatch, which is a partner venue of ours that's based in Switzerland. And the venue, there's a mirroring of the assets onto the venue. The assets can look into the account, but they never actually leave SDX's cold storage, right? So this, of course, protects against and mitigates counterparty issues and defaults on the trading side. Now, another example of crypto being brought maybe more into the traditional ecosystem, because what we hear from our members and from banks is that they don't actually want to deal with products in a different way, right? They want to access crypto the same way as they deal with securities. They want to be able to use the same services, whether it's Swift messaging or portfolio management. They just want to see everything the same way. And so we've been working with the SIX tripartite collateral manager. And so this is the team and the product within SIX that manages collateral across all of the different SIX services, everything from derivatives clearing to bilateral and OTC margin transactions to exposure management and default management for ETP issuers. We have now been able to bring crypto into that product to use certain of the services. And that means that certain of the services that have previously only been available for securities around collateral management, like the ones I've mentioned, will now also be available for crypto, right? So ETP issuers can use the exposure management function. They can avail themselves of the default management for trading on external venues. The tripartite collateral manager can even structure more OTC and bilateral trades where, let's say, the collateral provider wants to be able to submit, bonds and crypto collateral for the transaction. So I think these are really huge steps forward, but at the same time, there's a long way to go, right? Because this doesn't quite mean yet that crypto can be used as collateral for repo trading or for equities. These are very tightly managed collateral baskets in cooperation with regulators and national banks. So I think we've made significant strides. I think there's still a long way to go.
Talking about that, clearly regulation is an interesting topic, right? Here we have SDX more focused on the Swiss market, Bitvavo more on the European, and Binance is more global player. How do you see regulation affecting your activity, your process, again, in the context of digital assets and crypto as a collateral? Maybe we start with Frederic, more on the global.
Yeah, so regulation is always a hot topic for any crypto exchange. But yeah, obviously it has a massive impact on collateral. When we look at MiCA, that's going to change the whole, the whole trading environment for crypto in Europe. With now we're looking at MiCA compliant stable coins. So as of now, USDT was the reference in terms of stable coin, and now we have only a handful. We have USDC and a handful of Euro MiCA compliant stable coins. But again, Euro stable coins, there's pretty much no liquidity at the moment. So it's regulation has a massive impact. Now on the Binance side and any other crypto exchange, in order to grow, I think we need to go and chase those licenses, those registration, working with the local regulators, to find a good playground, a good framework to be able to trade, because even the local regulators sometimes don't necessarily know what's the best solution. So it's very important to have that dialogue, and we do work very closely with, for example, other the AMF, other local regulator in other jurisdiction, and I think that's with that dialogue that we can work for a better future in terms of how we manage collateral, how what type of assets are deemed secure and compliant. So yeah, definitely a big thing to watch.
Audrey, on the European side, how do you see the situation evolving?
I'm sure, obviously, we're not going to be speaking about MiCA at length today, but it's obviously shaped how our business plans have evolved. A lot of that impact comes from the stablecoin issues, or where the clarification of the definition of art versus EMT, and within Europe, the asset referenced backed sort of tokens, stablecoins have now a much higher hurdle, right, in terms of its reserves, its redemption rates, rights, and also the governance structure behind it. So a lot of that framework has been dotted out for us probably the last 2-3 years in the making. That also brings about, I think, from a regulatory point of view, and licensing will come to that in a second, from a regulatory point of view, we've got regulated issuers that's on the table now. Yes, there's case for it. We need to build a bigger case, or we got to give them that room to run further. That's why there hasn't been that sort of uptake for a euro equivalent of a stablecoin offering since USDT has been sort of chased out of this jurisdiction temporarily, I think. In terms of that, it actually lends to, hopefully, well, the whole intention, I'm sure the regulators had that in mind, is to provide clearer and cleaner collateral quality, right? That's the whole point of regulated issuers. In the same way, with that having quality aspect, it means that if all of us work in concert under the MiCA guidelines, we also be seeking very much licensed counterparties. So, mirror to mirror. So if you're mirroring good behavior, it's more likely outcome that you also are promoting and executing good behavior. So I think that's how the spirit of the adoption of MiCA has evolved very much in our sort of playground. And finally, it's a lot the transparency element, transparency and standards. So we see a lot of the disclosures coming out, so risk management policies, documentation of governance standards, which in some ways gives everyone good pause for reflection as to how truly is how they should operate and work. I think one of the key problems or challenges that we've come across in navigating the crypto world specifically is that a lot of people are still revising their business models. You are one for everything or everything for everyone. And that's they have to have that clarity coming through. I think the regulation, as a lot of people say, if we embrace it, that actually gives you that nice framework of, okay, I'm going to pick this corner, this spot, and then we're going to focus on that and be good at this area. Yeah.
Thanks. Skye, I mean, clearly SDX is very close to this topic. How do you see, especially in Switzerland, the situation evolving?
Yeah, I think I'll try to be brief because I know we don't have a lot of time. I think the first thing to say is that we operate in a global financial system, and most of our clients are global businesses with offices around the world. So I think the need for uniformity and standardization on the regulatory front is crucial. Focusing in on Switzerland, and I think we're lucky in Switzerland because FINMA was, they really set a clear regulatory and legal framework very early, I think to the envy of many other jurisdictions. And, FINMA's always taken, there isn't a crypto license per se. It's more that you can offer crypto services or services for crypto under other licenses. So, banks are able to offer custody and trading for crypto, for instance, and FINMA's also introduced new digital licenses like the DLT trading facility and fintech license. SDX and SIX is obviously in a bit of a unique position as a systemically important intermediary and market infrastructure. So we're always in close contact with FINMA about whether it's launching a new service or adding a product to an existing service, what that should look like from inception through execution to onboarding the first clients. We initially set up a separate legal entity for our crypto business, which was an SRO, a self-regulatory organization, which was the right structure at the time. I think crypto was seen as quite a separate asset class, but as I've alluded to, certainly from a member and a risk perspective, clients just want everything to kind of be under the same service offering. So we're also kind of, it's a very fluid market. We're also now assessing the legal and the regulatory structure and actually looking at the option of offering crypto from our CSD in Switzerland. And I think this is to be able to offer the best asset protection for crypto that is equivalent to securities and other asset classes, but really also to further and advance this point around convergence and interoperability, right? And we think we can best achieve that by having crypto under the same entity and license as securities and all of the associated functions.
All right. Unfortunately, we ran out of time. Thanks a lot. And of course, if you have any questions, you will find all of them during the symposium. Thanks a lot. Enjoy.